How are you advising your clients to position ahead of April the 2nd and reciprocal tariffs?
Well, we advise our clients to stay calm. I think volatility is still here to stay. Visibility-wise, it's still not clear what's going to happen. We have seen it also with Donald Trump changing the tune again. That's also where we have seen the market rebounding from after the sell-off which we have been seeing. So we are telling our clients, try to look through volatility. Is not your friend in the short run, but we don't expect a recession to come in immediately. That's also where we still stick to our overweight position on the US equity market.
Stick to overweight position on the US equity market. That's interesting because a number of allocators have been giving up on the US exceptionalism narrative, have been rotating into Europe, have been rotating into China as well. What do you make of that strategy?
We have increased our US overweight in November at the expense of cash. So basically our call at that time was really to focus more on the mid-cap space, also on the S&P equal weight. And if you look through now, that's also basically the equal weight which is performing better than the S&P 500. I think that's also where we see certain sectors which are doing better. If you look at Europe, for sure, the fiscal, finally the defense, infrastructure spending, fiscal side is providing a boost to the economy. But what we see there currently, that the market went probably a bit ahead of the news itself, since it still takes time until the capital is deployed, until it really goes through into the earnings of the corporates. And we've seen a substantial rally there on the European equity market.
Yeah, Thomas, I got to ask you, are you also increasing exposure to China?
We are neutrally positioned in China, so basically neutral as well as Europe as well. So there basically we want to have exposure in China. We also see we have the Xi put. We don't have a Fed put. We don't have a Trump put. But at least with China is willing to do more. That's also where you see the incremental measures coming in, but they're still waiting to see what's really happening on the tariff side.
A deep-seek put, that's interesting expression. And we heard earlier this week and yesterday, in fact, one guest going as far to say he is shorting the Magnificent Seven in favour of taking positions and is now constructive on the China internet ecosystem. Would you go that far as well?
Probably I would not go that far to short the MAX 7. So we have seen also a substantial re-rating there. So if you look at the valuation on the MAX 7 now versus a few months ago, that has also changed tremendously. But of course we still see potential in tech also in China. We see more probably room for a correction first before we see another upleg. But for sure the DeepSeek moment has really changed the narrative there. And it's not only the hard tech, it's really more the soft tech which comes in, where also China is better positioned.